Welcome to JRNY TV, where we make the complex world of digital finance not so complex for everyone, regardless of your experience. And today we are diving headfirst into Hyperliquid, a rising star in the world of decentralized exchanges. It's starting to turn some serious heads. Unlike the usual wave of Ethereum-based DEXs or perpetual protocols that get hyped and fade, Hyperliquid has taken a very different route, building its own layer 1 infrastructure, its own matching engine, and most importantly, its own rules for how DeFi trading should work. And it's working. Traders are taking notice. Volumes are surging, and Hyperliquid is suddenly competing with the big boys without raising a single dollar from VCs. And that's no small ordeal. So what exactly is Hyperliquid? At its core, it's a decentralized perpetual futures exchange. Think of it as a decentralized version of Binance Futures. No signups, no know your customer, no intermediaries. But what makes it different is that it's not built on top of Ethereum, Solana, or any existing chain. Instead, the team created their own custom layer 1 blockchain that's optimized specifically for ultra-fast, low-latency, high-throughput trading. And this custom-built architecture, it allows Hyperliquid to process over 100,000 transactions per second and offer a user experience that feels more like a centralized exchange than a typical DeFi protocol. It's a bold move, but one that is definitely paying off. And what's even more impressive is how smooth the user experience ultimately is. Wallet connections are frictionless, orders are fast and responsive, and there's no gas fee drama to worry about. It also supports deposits from over 30 different blockchains, making onboarding seamless for users across all ecosystems, or most. There's no token required to trade, and everything feels purpose-built for the trader. No bloat, no fluff, just clean, high-speed trading on a decentralized backbone. And in a space full of over-engineered products, Hyperliquid simplicity is turning out to be its secret weapon. But this project isn't just a slick UI and fast backend. It's backed by a growing community of serious traders and builders who actually believe that Hyperliquid could be the next major evolution in DeFi infrastructure. With on-chain order books, full transparency, and a focus on performance over hype, well, Hyperliquid has carved out a very unique lane. The only question now is, can it scale into a truly global trading platform? Well, if early growth is an indicator, the answer might be a loud yes. What is Hype and its utility? At the center of the Hyperliquid ecosystem is the newly launched Hype token, the protocol's native utility and governance asset. Hype officially launched through one of the fairest and most organic airdrops that we've seen in recent memory. And there were no VC allocations, no private sales, and no insider deals, just pure distribution to users who actually used the platform. Hype is designed to serve two primary roles. It allows holders to govern the direction of Hyperliquid and enables staking, and users can lock up tokens to earn a share of protocol fees. But unlike many DeFi tokens that are required just to interact with the protocol, Hyperliquid, on the other hand, has made Hype entirely optional for traders, ensuring a seamless, low-friction experience for newcomers while still giving added value to those who actually commit. Why is this such a big deal? Because it shows that the team is thinking long-term and building from principles. By not forcing users to interact with the token, Hyperliquid avoids the typical pitfall of unnecessary token utility. Instead, they designed Hype as an opt-in mechanism for governance and deeper protocol engagement, not a paywall. This makes the protocol more accessible while still creating strong incentives for users who want to get involved at a deeper level. And the fact that the team skipped VC funding altogether and gave power directly to the users, that's massive in an industry where decentralization is often more a buzzword than it is reality. It tells us that it's not just another farming coin, it is in fact infrastructure. So what should you be taking away from this? Hype is not just another speculative DeFi token. It is in fact your ticket to help shape one of the most advanced decentralized exchanges in the world. And if you believe in what Hyperliquid is building, holding Hype, it gives you skin in the game and a voice in its future. And with token staking live and governance on the way, this is the moment to start paying attention. Learn how the staking works, follow governance proposals as they roll out, and watch how the token is integrated into future product layers. Because if Hyperliquid takes off, Hype will be at the center of it all, roadmap and future plans. So maybe you're asking, what is next for Hyperliquid? Well, the team behind the protocol has been remarkably quiet compared to the other loud, hype-driven DeFi projects. But don't confuse silence for inactivity. Hyperliquid has been steadily, quietly rolling out its features that make it clear they're playing the long game, not the short one. One of the most important milestones on the horizon is the launch of Hyper EVM, a permissionless development layer that will allow third-party developers to build applications directly on top of the Hyperliquid ecosystem. This is a major shift from being just a trading platform to becoming a full-blown decentralized financial operating ecosystem. Why is this such a critical development? Because once Hyper EVM is live, it opens the door for modular DeFi expansion. Think lending, structured products, apps, automated strategies, trading bots, even social trading apps, all built directly on the same high-performance infrastructure that makes Hyperliquid so powerful today. The ability to build trustless apps with sub-second execution and no gas drama, it could attract a new wave of developers and DeFi power users that we have never seen. It transforms Hyperliquid from a one-trick exchange into a foundation for an entirely new DeFi stack with near CEX performance and full decentralization. So what should you be thinking about moving forward on right now? If you're bullish on Hyperliquid today as a trader, you need to start thinking about it as a platform, not just a product. The launch of Hyper EVM is going to be the moment where ecosystem growth really starts to compound. Watch for early app developers, look for new integrations, and do pay attention to governance proposals that will help determine how Hyperliquid evolves once it becomes programmable. Because the users who actually get involved early, whether as builders, hype stackers, or maybe community contributors, they are going to be the ones shaping and benefiting from the next phase of this ecosystem. Tokenomics and why it's bullish. Let's talk some tokenomics, because in crypto, how a token is structured often tells you how serious the team is about building long-term sustainability. And in the case of Hyperliquid, the tokenomics behind Hype are surprisingly clean, community-focused, and designed to support actual utility, not just short-term hype. The total supply of Hype is capped at 1 billion tokens, with no private sales, no VC allocations, and no insiders getting in before the public. That's a big deal. That alone sets the tone. Instead, the distribution was broken down as follows. Around 31% was distributed to early users through a fair airdrop. 38.9% is set aside for future emissions and community incentives. 23.8% is allocated to core contributors. And the remaining 6% is earmarked for the Hyper Foundation's operations. Why is this important? That's simple. Because these numbers show that the project is built for organic growth, not pump and dump hype and economics. When you cut out the VCs and seed investors, you eliminate the pressure of early unlocks and massive dumps on retail participants. It creates a healthier token economy that rewards real usage and long-term participation. The large portion allocated to community incentives means that the protocol is heavily focused on rewarding actual contributors and traders rather than passive speculators. And that is another very big deal. That kind of incentive design, it creates stickiness, which is exactly what you would love in a layer 1 DEX environment that thrives on volume and loyalty. So what you need to understand is, as an investor, these tokenomics give Hyperliquid a huge runway. The emissions are sustainable, the foundation has room to operate, and there's a built-in reward structure that promotes growth without putting artificial pressure on the token's price. That's kind of unheard of. It also means that as trading activity ramps up and as staking and governance deepen, the value of holding Hype could increase, not just because of speculation, but because of utility and protocol revenue distribution. If you're watching for the next DeFi blue chip, projects with clean, community-aligned tokenomics like this are exactly where you should be looking. What makes the project unique? With so many layer 1s and decentralized exchanges in the market, the question becomes, what makes Hyperliquid stand out? The answer is just about everything. From day one, Hyperliquid has broken away from the standard playbook. Instead of building on Ethereum or launching a token months before there was a product, the Hyperliquid team, it built the product first. It grew real volume. It proved user demand, and only then introduced a token. But even more impressive, technical architecture. Custom-built layer 1 blockchain, an on-chain order book with CEX level speed and full commitment to decentralization without sacrificing any performance. And why is this such a game changer? Because Hyperliquid is effectively solving the DeFi trilemma that so many other protocols fail to balance: performance, decentralization, and usability. Most DEXs compromise on one of those elements. They're either slow and decentralized or fast and centralized. Hyperliquid is one of the very few platforms actually delivering on all three. Their blockchain, it supports sub-second block times and near zero latency trading, while still keeping every order, every fill, and every balance update transparent on-chain. That level of openness combined with speed is something that very few protocols, if any, are pulling off at scale. So what should you be taking away from this? It's simple. Hyperliquid isn't trying to be a copycat. It is building from scratch with intention, and it's working. Whether you're a trader looking for better execution, a builder hunting for the next big ecosystem, or maybe you're an investor simply trying to get in ahead of the crowd, this project, it checks all those boxes that matter. And in a sea of clones and overhyped rollouts, Hyperliquid feels like one of the few genuinely original, high-performing DeFi protocols on the market right now. And if they continue to execute everything the way they have been, there's a real chance that this becomes the go-to decentralized trading hub of the next bull cycle. Why Hyperliquid deserves your full attention. So where does this leave us? Well, after digging into the tech, token, the roadmap, and the vision, it's clear Hyperliquid isn't just another DEX. This is a protocol built built from the ground up with a singular focus to bring high-speed CEX quality trading into a fully decentralized, transparent, user-owned ecosystem. It's fast, it's scalable, it's definitely clean, and with the Hype token now live and ecosystem plans expanding, Hyperliquid is transitioning from an under-the-radar trading tool to a full-blown financial platform. But what really stands out is how intentionally this project has been built. No VCs, no token-first hype, just raw, verifiable growth and commitment to decentralization that most protocols only pretend to care about. The infrastructure is already here. The performance is absolutely real. And now, with Hyper EVM, staking, governance, and ecosystem apps on the way, the runway for growth is wide open. So here's what you need to do right now. If you have not tried the platform just yet, go test it out. Even without touching Hype, you've received the airdrop, please understand what you're holding and what it represents. And if you're watching from the sidelines, now is the time to start following governance, tracking roadmap updates, and paying close attention to what gets built on Hyper EVM. Because projects exactly like this, with real users, real utility, and no handouts, they do not stay under the radar for too long. Please do let us know in the comments. Have you taken some time to trade on Hyperliquid just yet? Are you holding Hype? Or maybe you're waiting to see how it plays out. We would love to hear your thoughts. If you got value in today's deep dive, please do make sure to hit that like button, subscribe to JRNY TV, and tap that bell so you do not miss what's next. We've got more project breakdowns and market updates coming your way every week. Thanks for watching, and as always, stay early, stay curious, and we'll see you in the next one.